Here we have the 1 hour chart. Now, I want you to think about how I taught in the past market structure, and I taught how I use long-term highs, intermediate term highs, short-term highs. For instance, we have this high right here. This high is a long-term high on this 1 hour chart. Why? Because to the left of this swing high, we have a swing high that's lower than it, and to the right of it, we have this swing high that's lower than it. But then we have a high to the left of this one that's higher than that one. This is an intermediate term. This is an intermediate term high. Long-term high, intermediate term high, intermediate term high. And everything on the downside with all swing lows is basically the same thing. The intermediate term and long-term highs that have imbalances in them are going to be high probability setups because this inefficiency is going to be much more meaningful than something that may form in a short-term high like this or a short-term high like that, even in here. So this long protracted buy-side imbalance, sell-side inefficiency, that's what I used as my framework on Friday. I extended this buy-side imbalance, sell-side buy-side imbalance, sell-side inefficiency, or BISI for short. You extend that forward. But if you really want to understand the marketplace, you're going to have to look at inefficiencies, order blocks, and PD arrays the way I teach it, and you need to cast them forward as far as 60 days in advance or 60 days in the past. Look back. And that frame of 120 days, the market's always dynamically referring to all of that. It's a constant continuum of referring back to those same data points. And those data points are my PD arrays, premium and discount arrays. So by extending this in the future, going through all this, we see on Friday morning, it pumped up above Wednesday's high, right here, trades above it, and goes to the upper quadrant and pierces it of this buy-side imbalance, sell-side inefficiency. These inside this little red box here, that's that portion on the daily chart that I stated from Wednesday's consequent encroachment of its daily wick to its close. That's what this red section is here. This orange box here, this large orange box, is this BISI here. You can see me entering up here above the Wednesday daily high and inversion fair value gap, and it drops down. Now, what you don't see here, what you do not see here, is the high of February 24th's SIBI, because that's exactly what I was keying off of. That level is what level I was looking at. And as it was sweeping above it, I was using the candlesticks in here. I was trading in the consequent encroachment of that candle there. I'm sorry, the rejection block of that candle. This candle's up close. Then this wick I used in this candle. I went into consequent encroachment there. And then I used the order block here, changing the state of delivery. So as it dropped down in here, it went into that segment of price action. I told you from the daily chart that this would be the bulk of where the ideal scenarios for you as students would see. So if this is a market maker sell model, in here you can do distribution, and then the low of it here, as it hits it, that's the unicorn. That's the second stage redistribution where the fastest delivery happens and it goes boom, there it is. Okay, let's continue on. So here's the business. Here's February 24th's daily SIBI high. That's that purple or blue line here. And there's a high level line that's just above that, right in here. And the combination of the upper quadrant of this buy-side imbalance, sell-side efficiency on the hourly chart, that's what that red line is. You can barely see it, but it's there. And then here's the consequent encroachment of this buy-side imbalance, sell-side efficiency from the hourly chart. And here is the lower quadrant level. And there's no low or high level. So we have a confluence of the upper quadrant of that 1 hour buy-side imbalance, sell-side efficiency. It is the February 24th of 2025's daily high of its SIBI, which is the same SIBI we've been talking about for months. See how this is a key level? See how awesome it is to know that these things repeat over and over again? I know that these levels are going to repeat. They're going to be extremely sensitive, especially at key times of the day. So what do we have here? The market used that portion of price action. I told you where the bulk of the volume would be coming in for movement higher or movement lower. The best setups that I teach for the classic market maker buy model, market maker sell model setups, reaccumulation, accumulation, reaccumulation, smart money reversal. I was shorting at the very high candles using the logic that I teach with PD arrays that's not found in Wyckoff. So by seeing this candlestick here, after it pierces above that, I know if I'm expecting it to drop down, because all this was a Judas swing. It's rallying up there, building in a premium. And that up close candle there is going to be a inversion fair value gap. Why? Because it's going to go up here and drop. Look at the bodies respecting it there. See that? I know that if that happens and we rally up, it's eventually going to sail through it. If it trades back up to it again, that could be an area where I could add to the position. But this also is another inversion fair value gap. But it's the first presented fair value gap inside of 9:31 to 10 a.m. So extend that forward. Why is it going to be inversion? Because it's bearish. It's going up here to go lower. It consolidates in here. The bodies are respecting what? The lower half. That's exactly how I teach my PD arrays. If you're bearish, you want to see them respecting the lower half only with the bodies, and no trespass in the upper half of it when it's bearish, and no trespass with the bodies to the lower half of it when it's bullish. It's very, very simple. That's not hard. That's not complicated. The market breaks lower outside of its 1 hour buy side balance, sell side inefficiency. And then once it does that, I want to see it start to pick up pace. Breaks lower. If you look at this level right here, this is the regular trading hours opening price on Friday. That's basically the 9:30 opening price. Right here. So from there, it rallies up. So if we look at that opening price in relationship to where the previous day's close was, and that you can see down here is 21,961.75. And that's regular trading hours closing price for June 19th, 2025. So we have a premium gap. So what is it likely to do? Pull back down to try to make an attempt to close the gap. Here's a setup inside that area I told you. That would be the bulk of every setup that you would want to look for. This easy, low-hanging objectives where you can just get in there and take something I've already taught. It trades up to the high, sells off. Consequent encroachment, consolidates, breaks lower, boom, gap closure. Draw to this minor sell side liquidity. And then we have the February 24th of 2025 daily SIBI low. And it draws down from there all the way into that level, and then keys off of that back up into that section of price action, which is basically Wednesday's closing price. What does it do? Sells off. Second stage distribution. I'm sorry, second stage redistribution. Sells off into the new week opening gap, as I said it would. The market trades back up from near the low of the NWOG up to February 24th's daily SIBI low. And then what's it likely to do there? Drop. Where does it drop down to? Upper quadrant, consolidates in here, and then we'll have to move a little bit further. But I'm going to show you stripping it away. I teach that there's a 70% likelihood that the consequent encroachment midpoint of the opening range gap would be hit by 10 a.m. Eastern time. Well, you know, I have the cursor on the screen as I did the screenshot here, and that's this candlestick right there. It's slamming into consequent encroachment of the opening range gap here, nails it at 9:59. Breaks lower, does all the business here, and we're going to move forward in time. There's that breakdown here, return back into regular trading hours close. That was Wednesday's closing price. And then it sells off, trades down almost to the NWOG's low, back up to February 24th, 2025's daily SIBI low, trades down to upper quadrant, hits it again here, sells off. Look at the bodies, because the bodies tell you the story. The wicks do the damage. And I'm going to leave it up to you whether you believe that that is salient or not, because price didn't do anything below that. There it is there. And it moves marked time basically inside of NWOG. One more time, hammered up February 24th, 2025 daily SIBI low, just to close in no man's land between NWOG high and daily SIBI low from the February 24th.